Is the US equity going to resume its rise? I think so. And let's look in details what happened within the US market. First of all, as we have here, we have the S&P 500, and we had the decline into December and the rebound. And last February 27, we came here doing the interview saying that we might have a pause or a correction. We got a small pause, and now again it's rising. How do we know it's rising for good? Well, here we have the black line, which is the ratio from discretionary, so cyclicals, versus staples or defensive sectors. And this ratio is moving up. That means that again it's risk on for the equity market. On the other hand, here, the green line here is direction of interest rate, and we will have a look at that just a little bit later. It's getting marginal new and lower low. So first, the discretionary, the cyclicals, right? When we look at the daily chart, what we see here is sideways correction since February 27 and a little bit of a dip and a rebound, and now higher highs. And it's probably going to continue in that direction. Momentum is moving up. MACD as well is going to cross up. And we notice that the relative strength versus the S&P 500, right? How many people go into this aggressive growth stock like Amazon? We see that the rebound is moving up. So it's going to test the trend line and probably going to continue. And if we look at the weekly charts, taking a little bit more step backwards, what we see is when we join the highs of September and the high recently, the recent high on February 27, March 3, what we got is a white bar here, a break up, right? And the momentum is turning up again also. So on a weekly basis, we also have the underpinning helping to move up. And the relative strength, which has been hovering near the support trend line, is probably going to rise again a little bit. Now, let's look at the defensive stocks. During the correction, how did they do? Well, we noticed that during the March correction, between about February 27 and the low March 3rd, well, they did rose quite a lot on the relative strength. That means people did not rush into defensive. They did not believe in a correction, or they were already long the defensive stocks because they did not believe in this whole rising move from January 4th. So here we see we are close to the top part of the range. It's a little bit overbought, so probably it can rise gradually. Let's look at another defensive sector, healthcare. That's what we saw here on a weekly basis, the same message. But healthcare here is more interesting in the sense that we had a long relative strength downtrend. That means people did not care too much to go into defensive stocks. Of course, they went here. We look at biotech relative to healthcare. What we notice, this black line has been moving sideways or higher. Now it's a bit cool and toppy. It could move sideways. And here we notice that we are within a large triangle. So yes, we can marginally move higher, but there will be some resistance there. So people are not rushing into defensive. What happened on the bond side? Well, usually people say that when bonds are moving up, that means that people are defensive on the equity. They prefer to be allocated to bonds and not to equity. So bonds moving up means interest rates are moving down. And let's look at what happened since January. Well, we hit a low in January or December of 255 on the 10-year yield. Then we rebounded as it was more risk on. People rebuy equity. People said, okay, it's not a depression case or whatsoever. But we have moved sideways and not really moving up. And we know the reason. The reason are because people find the Fed quite accommodative. And right now, just before the Fed is going to issue maybe a few more information, the market is trying to test the will of the Fed by testing the 260 levels. But let's look, even though we are gradually grinding down, let's look at the more monthly charts. And the monthly chart gives you more perspective over 10 years, right? Over 10 years, we notice that since 2016, we have been moving with higher high and higher lows. And right now, we are back to this area of 255, 260, but this 260 level is kind of a pivotal level. As long as it holds on a bi-weekly or monthly closing basis above 260, then probably we are not going to move in the lower range between 260 and 230. Look at this extremely oversold monthly momentum. So from October 325 to 260, we already have made a huge move down in yield and move up in bond prices. So probably it's kind of extreme overbought on the bond price, extreme oversold on the yield side. So what is doing the US currency? Well, if we look at the longer term, a quarterly chart since 20 years, since 2000 now into 2019, we noticed four big white bars here. And the last one is moving above the quarterly clouds. So that looks quite bullish. You see the momentum is turning up, has turned up since the first or second quarter of 2018. Definitively, we need to give the benefit of the doubt to the bulls on the US dollar index. Shorter terms, if we look at the weekly charts, of course, just on March 8, as it was trying to go through the roof of its range, 97.25 to 95 something, it failed. And at the same time, if you remember, on March 8, the equity was just doing a kind of testing support. So in other words, with hindsight, of course, we can say that by depreciating a little bit the US dollar index, it came to the rescue to the equity market. However, look at this trading range and look at these narrow Bollinger Bands. It's not going to move much outside of its range so far. At least from a technical viewpoint, it hasn't given any strong signal. So what remains? Remains are the long-term cycle, and we should have a think about it or remember it. You saw that chart maybe 2 years ago in the previous interviews. Here we combine three different types of charts, of cycles, if you wish. The 4-year cycle, the 10-year cycle or 9.25 cycle. And we notice that in October 2018, in theory, we should have had a major cycle low, 4-year cycle low. Well, this time it occurred in December. Still the right year, but with a little delay. It's not too important, but it tells us something that this low of 2018 is probably as important as the low in 1998. And we should remember that after 1998, the market was able to move up into 99 and in some part of 2000. So we should not be overly pessimistic right now because we are still below 2940 on the S&P 500. We are going to see this 2940 soon or later. Probably not right away because the move up is not going to be in a straight line. It's more likely like what I've suggested before along our violet path here. You know, we'll go to probably 28, 50 or 62, move back a little bit, take times. After such a huge 10 weeks uprise, which was so strong, we might pause or feel a range before we ultimately retest the area of 2940 and eventually go higher. If you look at the short terms, it's probably short term quite bullish on a daily basis because we have moved above 28.15 and it can move crossing above the Bollinger Bands having the stochastic moving up and not already crossing down. So if it holds, it can grind up to 2850, 2862. But then expect some pullback. It's not going to be a straight line that we had here in the beginning of January, probably more like a rising wedge. So up, down to the support, and up again, and down to the support, and up again. That's all for today, and I look forward to meeting you again in 2 weeks.